You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody, welcome back to Options Boot Camp on yet another Education Wednesday. My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which so many of you are binging. We're supposed to be dark today, no live shows today, but you know what? I'm feeling great. I'm feeling down for a little bit of boot camp business, so fun surprise live stream, fun surprise show this week as well. Not going to have a show next week, of course, because it is the Wednesday before Thanksgiving, a.k.a. the biggest and busiest travel day of the year. I'm not a monster. I'm not going to make Dan brave the madness to come in on a day like that, I should say. So no show next week. But you're getting a surprise episode this week. So look forward to all that fun. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are mainlining out there these days. A couple reminders at the top of the show. A, make sure you're subscribed to the full network wherever you find your favorite podcast. We don't judge. And then, of course, if you're ready to go above and beyond, theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on this fine, fettled Education Wednesday. None other than my good friend / options nemesis, Dan Guadalajara Passarelli, the third Esquire. I don't know, I keep fixating on the G's. I just like it. From Market Taker Mentoring. Mr. P, welcome back to the show. Or I should say, Guadalajara Passarelli.
It does not start with a G, Mark, but I'm feeling fine fettled to be here.
Dan Mandalay Bay Passarelli. There we go. Now I got it. Now I'm zeroing in on it. It just took me a while to get there, but now we are there, listeners. And you know what else we are into, listeners? A little bit of the old options drills.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody. Welcome to a little bit of options drills and Mr. Guantanamo Bay / Mandalay Bay. Do you recall, beginning of the year, we had some fun. We checked in with AI. We said, what does AI think an options trading podcast should be talking about? And we went through, I think they had 30 suggestions for it. We went through all of them. We kind of did a thumbs up, thumbs down, kind of checked in on the AI. Do you recall that, sir?
I do.
We had a fun time doing that. So we thought getting towards the end of the year might be a good time to check back in with AI. You know, they're spending billions of dollars a day on these models, Dan, so they're getting better every second. We thought we'd do something a little bit different, though. We wouldn't just ask them what an options education podcast would talk about. We thought we'd get a little bit more timely, a little bit more actionable for the folks. So we asked the major AI models, Dan. We won't say which ones. We went to a bunch of them. We said, quite simply, what are the big developments in the options trading market right now? And then what should options traders take away from them? What should they be aware of right now in the options market? What's going on right now in the options market that traders need to know about, Dan? Top of mind, what do you think AI came up with? No cheating.
Gosh. I mean, I would say 24/5 trading, 24-hour day trading.
I think you have been working with the AI a little bit. Yes, that is one of them. Spoiler alert. We'll get there in a second. Let's get through some of the things that AI thinks you need to be aware of right now as an informed options trader, Dan. And then we will give our Roman Emperor-esque thumbs up and thumbs down to these suggestions. So prepare yourself, sir. Let's kick things off. AI's first suggestion, Dan, keeping things in the realm of our friends down the street, Cboe. They said Cboe announcing that it will launch futures on and options on what they are terming the Magnificent 10, Large Cap Tech Growth Stock Index, or the MGTN, Mag 10 Index, starting on December 8th. They say the takeaway for traders is look out for new index options products as they expand the toolkit, but check liquidity, implied vol structure, and how they behave versus single stock options. So, Dan, AI very excited about these Mag 10 options. I'm sure when our buddy the Flowmaster, Henry, joins us on the option block tomorrow, he'll probably be excited about them. But are you excited about this, Dan? You giving this a thumbs up or a thumbs down?
Why the Mag 10? Like the
Mag 7 is so 2024, sir.
I guess, but I mean, is that what all the kids are saying these days? Mag 10?
They're saying Mag 6-7. I'm not sure if you heard.
Mag 6-7? Yeah, well, that's weird. It's weird that they decided to go with Magnificent 10. I don't know. I mean...
So I'll tell you who they added, just in case you're wondering, who are these Magnificent 10? I think you can guess the 7. Who are the other 3? So you got your regulars, your NVIDIAs, your Apples, your Amazons, your Alphabets, your Microsofts, your Metas, and your Teslas. But then they're throwing in a few more, Dan. They're throwing in AMD, Broadcom, so AVGO, and Palantir. That's kind of a wild one, and that's adding a little bit of spice to the sauce. What do you think now, sir?
Yeah, I mean, those would be, I mean, without looking at volume numbers and going through all the, the left brain stuff, to me, those 3 make sense. That's what I would have picked too. I probably.
Yeah, interesting stuff here, listeners. So I guess I'm wearing the right shirt today, listeners. You can't see it because we will never release the footage, but I am wearing my ref outfit today, so I get to be thumbs up, thumbs down. So I'm gonna say this one's kind of a middle. It's interesting. It could be something. Cboe is infamous for coming up with a lot of cool ideas and throwing a lot of stuff against the wall to see what sticks. I always go back to the days of, hey, we're going to launch single name VIXs, right? So Apple VIX, GLD VIX. It seemed like a no-brainer, Dan, and those never saw the light of day. So I always temper my expectations with these. They promised me a couple of years ago they're going to have a dispersion index that we could trade. Yeah. That still doesn't exist. So I don't get too excited about these. That said, a Mag 10, that should be a little bit easier to pull off, I think, than a dispersion index. But I will remain cautiously optimistic, until we see serious volume in here. So I'll give the AI I'll give it a shoulder shrug for that one. Not the most exciting out there. And then let's go with this next one, Dan. They said margin clearing changes for the options market. This is kind of an interesting one. Also, not the most timely of things. We don't talk margin very often on the show, Dan, but it's not the sexiest of things. But OCC made some changes to their margin on the 0-day front back a few months ago on September 2nd. So it has been a few months. So the AI a little bit late to the game on this one, Dan. But they said OCC here implementing, as they put it, sweeping changes to how they collect their $4 trillion a day in margin for the U.S. equity options market. Their goal is to mitigate the potential risks stemming from the soaring popularity of 0-day options out there. So starting on September 2nd, OCC is going to start taking intraday snapshots of clearing member risks. So the different market making firms and everything else, listeners, because it makes sense. I mean, your risks are going to change intraday. We have been seeing a lot of 50, 100, 150 point intraday swings with the S&P lately. So it makes sense. If you're down 100 handles in the S&P, your risk might be a little different than if you're off 50 handles later on in the day. So it makes sense that they would probably do that, create a more intraday snapshot of the clearing changes. They say some folks are pushing back against it because it could increase costs, and it certainly can. If you're playing fast and loose with your margin, Dan, then I could certainly see this maybe being a little bit of a cause for concern for you. The AI says the takeaway from this, Dan, is if you are writing or selling options, especially naked or large/complex structures, which how many complex structures are going up in 0-day? Not a lot of time to get too complex, Dan. You can't really do the infamous 1x3x6 iron condor swap in 0-day. Understand how much margin changes might affect your cost of capital or risk. So if you're trading 0-day options, this could impact you. Then again, this is 2 months old now, so you probably would have noticed by now, Dan. But that said, were you aware of this, A? And B, what are your thoughts on AI's second suggestion?
Gosh, embarrassingly, I was not even aware of it, to tell you the truth. But yeah, I mean, I can see why this is one of the big things that she thinks. I refer to my Chat GPT bot as she.
I was going to say, way to genderize your AI, sir. Maybe he's a rough and tumble guy. You don't know. How dare you judge, sir? But yeah, this is an interesting one. Again, kind of a little bit dated. I wanted like right now kind of breaking stuff. But again, AI, depending on the model, some of their data is dated, pun intended. So it makes sense. It's an interesting one. Again, kind of in the weeds, not the sexiest of things. But this also raises the question, Dan, that I have asked every CEO of OCC since time immemorial. Why can't we have updates intraday on open interest? This makes this even more glaring. If they can do intraday risk snapshots of 0 DTE positions, I think they could at least give us, I don't know, a noon OI run. What do you think, Dan?
I think they could do it, but I think there are some people who don't want them to do it.
Yeah, I don't know if Mr. Griffin and company want intraday OI changes. But that said, I mean, especially with everyone living and dying between the opening and closing bells, 24-hour OI is meaningless for a large half of the SPX. Doesn't give an F about your OI change because it's already gone.
Yeah.
Isn't that wild? Just absolutely wild. So, yeah, a weird stuff. And now we get to Dan, to your suggestion. This is where you are meeting the minds of our soon-to-be AI overlords, Dan. They say number 3 is the extended hours trading push. They say Cboe looking to extend options trading hours, including overnight for equity options. They say more hours means more exposure to after hours and overnight events. They put in parentheses, earnings, surprises, macro news. Takeaway is if you have positions overnight, especially in earnings or volatile stocks, the extended hours may increase both opportunity and risk, Dan. So AI agrees with you on this one. I will admit, when I saw that headline come down from the Cboe, I was a little bit surprised. This was probably, I want to say, about a month ago or so. It is kind of almost a done deal. We're seeing a lot of retail brokers effectively offer what amounts to 24/7 trading on the equity side right now anyway. Like they're making these approximate order books in places like Robinhood where you can effectively trade the underlying pretty much 24/7 or at least 24/5 in a lot of these marketplaces. So it made sense that someone would try to make the options. And also the exchanges are not fools. They are all for-profit public entities now. So they see a lot of volume coming in the overseas hours. So don't be fooled, listeners. This is not for you. This is not for you wanting to trade and close out your 10 lot of Google options on earnings day. That's cool, but this is for the overseas crowd to be able to trade more, and they want to get more flow from that audience, and that accretes to more meaningful volume for them. If you benefit from it as well, I mean, Dan, how many times have you had an options position and you've seen a huge move in the after hours and you're like, man, those calls are looking pretty sweet, or those puts are looking pretty sweet to the downside, and then you come in the next morning and it's all unched and it's all gone and it was all a fever dream. So it will be nice to be able to maybe close something out in those moves. What do you think, Dan?
Yeah. I mean, there will be advantages and disadvantages, and the savvy are going to figure out those advantages for sure. Yeah, I mean, geez Louise, once it kicks off, I'm sure we'll have a show on it, but yeah, I don't know. I still don't feel like that benefits. I don't know. I don't see why we need it, but that's just me.
By the way, our chat is accusing you of misleading them on your name earlier. So they think you led them down the primrose path when they were not close. Others are saying they think it starts with a C now. So can we confirm or deny? There's a lot of debate going on this, Dan. The acquiring minds want to know. Thumbs up or thumbs down on the C at least?
Let's see. So if there's 26 letters in the alphabet, just round that to 25. So if I deny it's a C, you still have a 96%. Okay, yes, no C. It does not start with a C.
No C. All right, remember that, listeners. So all of you out there who are thinking, cockatrice, not his middle name, listeners, not at all. Funny that's the first thing that leaped to mind to me, a mythological creature. But I digress. Maybe I'm still hopped up on those pain pills they had me on earlier, Mr. Dan. But let's keep rolling. Let's see what else AI is feeling out here, Dan. This next one's kind of interesting. You can maybe argue this has kind of been the case for the last 4 or 5 years post-pandemic, but they say their next thing to be aware of, Dan, is retail and structural shifts. They say retail participation in options has grown significantly, more volume and different behaviors. They say unusual options activity in particular is being flagged frequently. They mention a particular trade on Victory Capital Holdings on the Jan 2026 45 calls. That's a wild one. I've never seen AI flag relevant unusual activity from. I'll have to go check those out. And he says, takeaway, be cautious of, quote, noise, large retail-driven flows, gamma pushes, or skew spikes may reflect non-institutional activity rather than informed hedging. I love that. I mean, like the notion that large institutional hedging is somehow informed is kind of funny, I think, because I think we've all seen large institutional blocks that have gone to die. That's 90% of what we talk about, it seems like, on shows like Options Oddities. The size money, not always the smart money, or even not frequently the smart money, listeners. But Dan, what do you think about this takeaway of the retail and structural shifts and to be cautious of large retail-driven flows, sir?
Yeah, that's I just talked about the fact that we're seeing so much more retail activity in one of our daily videos, and the fact that some of this retail activity can be very big, because the retail activity, I mean, I know there's a lot of smart retail traders out there, like our friends who listen to this show, but a lot of them do create a lot of noise. And when some of them are big, I mean, you got to think the smarter ones are the ones doing the bigger size, but you never know. Boy, that makes it interesting, though. I'll tell you that.
You want to get a piece of those Victory Capital Jan 45s now, Dan, though. That's floating your boat, I'm sure. Let's go out here. Another one they call volatility and hedging signals. They say, for example, in commodities, so commodities vol, it's interesting, the implied vol for copper options is relatively low despite high futures prices, suggesting hedgers may be stepping back, a potential early sign of a market reversal. They say the takeaway for options traders on this is that implied vol and skew dynamics matter. Well, you know what, Dan? I think we can get behind that as a takeaway in general. Don't just look at the underlying asset move. Look at how the market is pricing the options around it, Dan. Skew, term structure, and implied vol versus realized vol. So, hey, I can agree with AI on this one. I haven't specifically looked at copper. Copper has been moving, though, right? I haven't looked at the vol. I know metals vol kind of getting jacked the last couple of weeks, so I'll have to see if copper is following suit. But yeah, I think I can get behind that, Dan, that implied vol and skew dynamics matter. You shouldn't just look at the underlying price, right?
Yeah, I have not really been active in any commodities options for quite some time now. So I don't follow the skew of copper. But one general statement I can and I think should make is that while us equity option traders are used to the typical volatility sneer skew, it definitely does not work that way in a lot of commodities, because you have people using it and hedging it from both the buy side and the sell side, which is fundamentally very different from how the stock market works. Like shares of stock just exist. And so everyone who has it, I mean, everyone owns it. Even if somebody shorts it, there's somebody who they sold it to and that person owns it. So with things like corn, for example, like I traded corn options. You have the grain elevators who need to buy it and they hedge future buying. And you have the farmers who have it in the ground and they need to sell it, so they hedge future selling. And so you get, you get a very different skew in different commodities than you do with stocks. So I don't know if what's going on in copper right now is normal or not. I don't know.
Copper, a wild one. If you want to learn more about copper options, you should be listening to the full network, listeners. Tune in to This Week in Futures Options every Thursday or on demand whenever you like to listen to your favorite podcast. Listen to 2 a.m. if it floats your boat out there. We have talked about metals a lot lately. Copper has snuck in there a few times. It's mostly been precious of late for obvious reasons, but copper is kind of interesting. So Dan, the AI's synopsis, the summary, the takeaways for options traders from all of this is a couple of things. They say, don't just watch the underlying stock or asset, watch the options market as well. Implied vol, skew, volume concentration, open interest. The options market often signals hedging and sentiment flows before the underlying fully moves. They also say, recognize the costs of doing business, margin changes, extended hours, new product structures, and liquidity factors. And then last, manage the risk. So early or expiration and assignment risk, overnight news risk with this extended hours especially, and then premium decay and gamma risk in short-dated options. So Dan, what do you think about the AI synopsis of what options traders need to be aware of right now, sir?
I mean, it's a pretty good list. Geez, I'm not sure what I would immediately add to that list. I mean, outside of just like trading, market knowledge, fundamentals, or macroeconomics. It's a pretty good list. They don't call it artificial intelligence for nothing, do they?
Not bad. I will say some of the early results, they were just like spitting back search results at us. And I was like, this is not entirely, you could do this with Google in 2 seconds. This is not, here's a recent headline from Bloomberg. Okay. But a little bit more analysis. It wasn't bad. Not bad. I will say all in all, not terrible. But you know what's never terrible, listeners? It's your questions. Let's get to it now. A little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, let's get down to business with your Q's and some A's. Dan, you mentioned your first suggestion for what AI should want us to talk about is 24-hour trading. I will say you were on a good tip with that. I was at the FIA show in Chicago yesterday, the Futures Industry Association, a.k.a. the big derivatives gathering in Chicago every year, listeners, where people from all over the globe come. And the second most popular panel that I saw and attended, and standing room only, even though it wasn't in the big main hall room, it was in a secondary room, so bear that in mind. But it was the 24-hour trading panel. Everyone was all in on that one. A lot of people had a lot of questions about that. Can you guess what topic or asset class dominated the talk and took over the main event stage Standing room only in the big hall, sir, yesterday. I'll give you a hint. We talked about it very recently on this show.
What crypto? No, wait, no, I don't know. No, what?
They begin with a B or begin with a P. Binaries or prediction markets, sir. That was the hot thing. The prediction markets panel, standing room only in the main hall. This was a thing just a couple of years ago. They had sessions on this, but it was like a breakaway in room 12 on floor 17. You know, nobody went, 5 people. And now it's standing room only in the main hall with all your big players up there, I think with the exception of Polymarket on the stage. It was kind of fast. I tweeted out some photos of it yesterday, so if you follow us at Options, you can see it for yourselves, listeners. So, Dan, we were on the right tip talking predictive markets. I already thought that going into that event, but coming out of it, definitely seems like the future for a lot of people is in that side of the space. There's a lot of money right now, Dan, being spent trying to delineate and carve out the wiggle room between a bet and a trade. And where does that wiggle room lie? Because there is a lot of money being spent, at least in that area. And a lot of people taking umbrage. Oh, we don't say the word bet. We say trade. You know, everyone's like, yeah, okay, whatever. You can call it whatever hell you want. It's a bet at the end of the day. But there is a lot of money, a lot of legal analysis and regulatory analysis being done. What really differentiates, you know, buying an upside call on Apple versus taking the under on Saquon Barkley against Dallas or whatever? Where is that line of demarcation, Dan, at the end of the day? But we got this right in from Gary, and Gary said, hey, good timing on your predictions episode. Did you see this headline? Maybe they listened to the show. And yeah, Dan, well, first off, thank you, Gary. We did have a good time. It was excellent timing on our part, Dan. We planned the whole thing. But no sooner did we turn off the mics last week, Dan, than CME and FanDuel come out with a big announcement. They already had announced they were working together, but there was nothing concrete that we saw coming out of it. And I didn't think we'd be seeing anything really sports-related coming out of CME anytime soon. Boy, were we wrong, Dan. No, they announced literally after we turned off the mic, so they were waiting until we were done to put this out last week. But they announced just last Wednesday, CME and FanDuel are going to launch predictions market through a new FanDuel Predicts app, Dan. This will launch not next year. This is going to launch in December. This is coming up next month as a standalone mobile application. And guess what you can trade on this thing? Sports events contracts, basketball, baseball, football, and hockey. Isn't that wild? And it seems, Dan, this is another big talking point on the panel yesterday. There's a lot of debate about how to proceed on the regulatory front. Do you go state by state because that's what they've been doing with sports betting? It's a state by state battle. Or should it be one big federal regulation? It's legal or it's not. Obviously, one's a lot easier than the other. So there's a lot of debate, a lot of money being spent lobbying on both sides of that. It seems like this app, Dan, is an end run around that because they say here in kind of some weird legalese buried in the press release, in states where online sports betting is not yet legal. And they had a big graph yesterday event of which states are and which states, and there's still a large swath of the country where online sports betting is not legal. So if you don't live on the East Coast or West Coast or certain swaths in the middle of the Midwest, like Illinois, you really can't bet online yet. So states where sports betting is not yet legal, customers who are not on tribal lands, Dan, so don't try this if you're on the tribal lands, will be able to trade event contracts on the outcome of sporting events. So this seems like it's a bit of a weird end run around the local regulations. Maybe they're piggybacking on CME's regulatory clearance. They say as new states come online and legalize sports betting, FanDuel will cease offering these sports event contracts in those states. So apparently this is an app solely for states that don't have legalized. So I guess we can't use this in Illinois, which is kind of wild. And then as these states come online, they're going to delist them from this app. Isn't that wild, Dan?
Wow. I mean, I want to hire whoever that was from FanDuel who made that deal. Like, geez, how do we get, I don't know, we'll find somebody at CME to, partner up with, but they'll never go for that. I'll talk them into it.
Well, you can see why CME might be attracted. I think maybe they think they've kind of reached the apex of the growth for WTI and the 10-year, and they want to maybe hit some new audiences. FanDuel brings that to the crowd. In fact, Terry Duffy pretty much says that, the CEO of CME, in this release. He says, our new event contracts, that, by the way, they also, buried in the release, they also mentioned they will offer traditional stuff. So S&P 500, NASDAQ, oil and gas. So it's not all sports. They're just leading with sports, Dan, because it's sexier. But they say, Terry said, our new event contracts on benchmarks, economic indicators, and now sports will appeal to a new generation of potential participants who are not active in these markets today. This launch will dramatically expand our distribution and reach, connecting directly with FanDuel's millions of registered US users. So there it is in plain English. CME wants to reach that FanDuel user base, and they're willing to maybe go along with this in order to do it, Dan.
Yeah, I mean, hey, man. Yeah, I mean, if I was FanDuel, I would do it too. Yeah. It's strange times.
Dan, it doesn't sound like, even if you were not legally prohibited from doing so, apparently, it doesn't sound like you would be running to download this, what is it called? FanDuel Predicts app and try it anyway, Dan?
I don't have an edge in sports betting, and so I know better than than to do it. And I'm all for it. I think gambling should be totally legal, everywhere. If somebody wants to do it, they should be able to do it. But sports betting, I know that I would lose in the long run. I have a negative expected value proposition here.
You have no edge on the over-under for Saquon Barkley rushing yards? Or how dare you say such thing? By the way, if you're wondering, listeners, these are going to be your standard cheapy binaries, a penny to a buck. So they're going for the cheaper one. So this will be interesting to see. Now, that's weird that I can't, unless you can get this app. It sounds like you can get the app, and maybe they'll just delist the sports products when they're legalized in that state. So I can still get this app, it sounds like, and trade binaries on WTI, but not on sports. It's very confusing what is going on here. But it is interesting, listeners. So again, huge developments in this space. And if judging by the turnout and interest and a large amount of capital arrayed on that stage yesterday, there is more of this coming rather than less, Dan. And it does sound like a lot of them see the ideal opportunity is on the sports side. A lot of them are fixated on that. They see that as really the key to opening the floodgates to a whole new audience of potential traders, really, who are currently not in the options market, Dan. Well, what do you think about that?
Well, I mean, one thing I'll definitely say is that's a huge darn market. I mean, oh my goodness. Just look at the number of people who, isn't Monday Night Football like the most viewed show on television?
Yeah, Monday Night Football blows away like Game 7 of the World Series. It's wild. It makes you wonder why they play any other sports.
Yeah.
Football is so big in this country. It's wild.
Yeah. So, there's a whole bunch more people gambling on sports than there are trading options on, Apple.
Yeah, I remember talking about this with the Nadex people like over a decade ago, saying, imagine what you could do if you could break into those markets. And they all said, yeah, that'd be great, but CFTC would never allow it. Very different era these days, Dan. Seems like everything is open season on everything. There's a Kalshi ad going around. Pretty much anything on the rock is tradable. It's anything on the globe. Any event is tradable in their eyes. So kind of interesting. We're heading into a brave new world. Some might say a terrifying new world, Dan, depending on your viewpoints. It might be a subject of our question of the week next week. Speaking of questions of the week, Dan, we had a fun flash poll yesterday because coming out of that predictions panel, one of the members put up a release recently from the NFL saying there's been a lot of crackdowns on gambling recently and arrests in NBA and other places. And the NFL came out and said they don't like these prop bets, these kind of wild bets, who will win the coin bet, all this kind of stuff. These weird little side bets you can make on these things. They say because those are very easy to manipulate and they think those should be banned. And there was a lot of debate on that on the panel yesterday. So we thought we'd put that out to our audience, Dan, yesterday. We said quite simply, the NFL thinks player prop bets are too easy to manipulate and should be banned. Do you agree or disagree? Dan, if you have a thought, have at it. And then B, which way do you think our audience went? Did they disagree or agree?
I mean, it probably depends on the prop bet. I mean, if you can show me somebody who can influence the coin toss, hook me up with that person. I want to talk business.
You can't influence the coin toss? Crazy.
But if it's like, what color socks does, the quarterback of this wear? Like, yeah, that's kind of, and the NFL should not have to tell them that. Like, I mean, that's the whole point behind gambling, is that it's an outcome that neither party knows and they're betting on it. So, yeah. I mean, I think that is a responsibility of FanDuel or Kalshi or whoever is coming up with the thing. Like, it shouldn't be manipulatable. So that's what I say. And I don't know if I don't know which prop bets that would extend to. Probably not all of them, maybe some of them.
I think we would all think that some of these things were safe, right? Because these players are getting paid tens of millions of dollars. They wouldn't throw that away over small amounts of money. Then look at that big scandal recently in baseball where players who were getting paid 10, 20, 50, 60 million dollars, I forgot, threw it all away to hit prop bets for 50 grand, 10 grand, something like that. I mean, so people will take actions that are economically not in their best interests. So kind of wild. So in light of that, there might be something to this. Our audience seems to agree with the NFL, Dan. Nearly 75%, 73.3%, they say agree, ban them all. And 26.7% say they disagree, keep them. One of our pro members, I don't see him in the chat today, but he chimed in on Twitter, Age of Del Aquarius, and says, I never want to hear of prop bets again. I like to watch sports, not gamble on who is going to scratch their butt first. So there is, you can probably control that prop bet out there, Dan. So interesting stuff. Again, I don't think we have heard the last of this debate over the event space, Dan, because it is the hot thing. Speaking of the hot thing right now, we asked our audience our actual question of the week, Dan. Is right now, gun to your head. You got to buy and hold and at the money call through the end of next year, not the end of this year, the end of next year, 2026. In one of these asset classes, which one are you choosing? We're going Bitcoin, we're going gold, we're going the S&P 500, or the infamous other, Dan. Which way are you going? Which way do you think our audience is going?
Through the end of next year?
End of 2026.
I'm going to say gold. It sure seems like any rational person should say that gold's had its run and couldn't possibly outperform, or keep up the same performance next year. But the S&P 500, I think will probably have a good year again next year, but it's it's starting at a deficit. It's starting already, I think, still overpriced after this little 4% dip or whatever it's been. So I can't pick that one. Bitcoin, who the heck knows? And stuff like the VIX. VIX reverts to the mean. And so, yeah, I think with inflation still not at its target, and with still all the fundamental buying from China and Russia, which I think is still going on last I checked, I think it's gold. I think gold's the answer.
Dan, you usually have your finger on the pulse. Today you have your finger on number 2. Gold coming in a little bit shy of 37%, 36.8%. The big dog, Dan, taking it with nearly half of the votes. Bitcoin, 47.4% right now. Want a little bit of BTC in their back pocket. Interestingly enough, Dan, only 10.5% going for the straight up S&P 500. No joy for straight up stocks right now. And then we have 5% for the infamous other, including a write-in for Dees VIX at the money calls. I don't know if I would want to buy and hold a year and change of VIX. That seems like a mad gesture. But hey, to each their own out there, Dan. Speaking of each their own, Dan, do you have any questions of the week you want to share with the folks, sir?
Yeah, I got a question of the week, Mark. Let's do it.
All right, then. Let's hit that music.
And now, it's the moment you've been waiting for. It's time for the Market Taker Question of the Week.
I was just rocking out to Dan's theme. Mr. Dan, sir, what do you got for us this week?
Okay. What preparations do you take with your trading account before going on a vacation?
I prefer preparation H as my preferred one, but to each their own.
Yeah, there's maybe some tucks in a pinch. So, yeah, I think this is something that's kind of important to talk real briefly about for a minute. I like when I'm going on vacation, like especially if I'm going out of the country where my sleep schedule is going to be not market hours conducive, or out of touch with the world. I try and take all my trades off, my short-term trades, unless it's something that like I know I don't need to look at for sure for a week. Not because I'm confident that it'll go my way, but because it doesn't matter during this week period. And as far as like IRA type stuff, long-term investments, I mean, the stocks, you just leave. But I'll plan accordingly with my covered calls and cash secured puts, and make sure that I'm doing something that requires no management, no surprise assignments, nothing like that. I think it's very, very important when you're going out of town and going to be away from your screen to plan your trades and have as little on as possible so that you don't have to worry about it, so you can enjoy yourself while you're away.
Good advice, sir, ahead of the biggest travel day of the year. I can still remember a little over a year ago, August 5th, I was traveling, and I that was the one of the few weekends I didn't do my the weekend UVIX trade that I was talking about a lot with our good buddy Russell. That was the best weekend, I think, in recorded history for that week, for that trade. So sometimes that could come back to bite you. I said to myself, what am I going to want to have UVIX on for? I can't take it off. I'm going to be traveling. And that one came back to bite me a little bit, Dan. But other than that, that is usually 99.9% of the time, that is usually good advice, even though you do miss your odd August 5th meltdown every now and then. And in between then, Dan, if folks want more good advice, or maybe to check out a Substack or two, where should they go? What should they do?
Sure thing. Yeah, my Substack. I spend a lot of time writing on there, probably more than I should, but I like to put out really good, useful stuff. And that is Wealth Building with Options on Substack. So that's basically wealthbuildingwithoptions.substack.com, or just search for Wealth Building with Options when you get on Substack, or me, Dan Passarelli, on Substack.
And of course, while you're checking things out, listeners, check out our friends over there at Tasty Trade. TastyTrade.com/podcast is the place to go to kick the tires and light the fires. They love all of you OBC listeners out. They know you're the best of the bunch out there when it comes to new options traders. You want to learn, you want to do it the right way. Check it out, TastyTrade.com/podcast. See what deals they have in store for you, especially you OBC listeners. They're going to like having you folks kick the tires over there. That's going to do it for us on OBC for this week. Not going to be done, though, on the network today. Not by a long shot, listeners. We'll be back. Why make you wait? We're coming back instantaneously in your ear holes for all you folks hanging out in the live with a whole good dose of futures on the Futures Rundown. What's lighting it up this week? Is it Dan's beloved copper? Is it something else? I guess we'll find out on the Futures Rundown. Then we'll come back at the end of the day to wrap it all up for you folks with a little bit of the hot options report. Then back again tomorrow with our good buddy, the Flow Master in hand, to talk a little bit of flow on the option block. And then, of course, this week in futures options, we were talking about metals today. Then if you are intrigued by all that stuff, I think it was the AI suggesting copper. That's who it was. If you are intrigued about the copper term structure, tune in to TWIFO. Maybe it'll make the list this week. And then, of course, Vol Views on Friday with our buddy Dr. Vix. Then all the other fun until we're back again next Education Wednesday. Another episode of Options Bootcamp. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.